Welcome to Breaking Bread. Give me one moment. One moment.
Hey, do you need extra confirmation to stay in your trades? Well, turn on those high key candles with your Fips. Green candle, you want the wicks on the top, and red candle's wick at the bottom for strength. Then you have dojis. You see how the wicks are respecting the fibs and no red candles with wicks at the bottom, so hold the trade. Watch the wicks off your Fibs. Oh no, I think she's on her way back. Gotta goo.
My apologies, family. Hopefully, nothing too crazy happened while I was gone, but let's get into it. So, welcome to Breaking Bread Presents 50/50. In this session, I will go over one of my favorite setups that I look for on Mondays and Tuesdays, and how using this setup will help build your confidence in your trades and within yourself. Now, before I dive into the setup, I want to let you guys know that this will be my last session for a while. But I felt the need to share this setup with you guys because I know most suffer from PTSD from past trades and just don't have the confidence in themselves like they once did, or if they ever had confidence in themselves while trading at all. But I know if you stay disciplined and patient, I'll say it again, I know if you stay disciplined and patient and just wait for this setup, it will help boost your confidence. Also, I'm working on putting a mentorship together to where I'm just using fibs and price, but we're going to use it on the future side. I love options dearly. It would always have a special place in my heart, but futures is where it's at. If you're not familiar with futures, I suggest you get futures educated because that's where it's at. But in the mentorship, I'm going heavy on the mental aspects, fibs and price. That's it. No indicators, nothing on my screen but fibs and price, and you. That's it. So if you know anyone that's looking to get into trading, please have them click the link in the description section of this video. Sign up to stay up to date for that mentorship information. Now, the mentorship is geared towards new traders because one, they don't suffer from PTSD like we do, and they're not in their own way like we can be sometimes. So it's geared towards them. Now, if you are a seasoned trader and you still struggling with some of those things, then you definitely can join the mentorship, but just be prepared to put in that work because we know you can read the chart. This is a you versus you problem. So we're going to be looking in that mirror to try to figure out what is your hiccup, what is holding you back from being the trader that you want to be. So go ahead and sign up if you want to get that information. Also, I'll put a link in the description of this video for a trading journal. I still trade. I still journal my trades to this day. If you don't, I do recommend you doing that. That definitely keeps you accountable and responsible for the trades that you take. Um, the whole objective is for you to create winning habits. And how you create those winning habits when you're constantly doing the losing habits? So you got to rid yourself of those bad habits and create the winning ones. So the way to do that is to journal your trades and write it down. Um, if you don't have a journal, then go ahead and click the link in the description, download it, save a copy how you want to save it. You can change it how you want to change it. Just make sure you do something that's holding yourself accountable for the trades that you take. Also, last thing, before we get into it, I do have a weekly watch list that I put out on the weekend. I do suggest, if you haven't already, to please sign up for my weekly watch list. I do it for the futures and options. Just show you guys what I'm looking at. Even if you don't take the trades, I suggest you just looking at the plays, seeing what I see, and try to train your eyes to seeing what price is doing and what I'm talking about. So if you haven't done that already, it's a link in the description of this video. Go ahead and sign up for that weekly watch list. But all right, let's get into it. So some of the things I'm gonna touch on in this video, is who is this session for? What's the 50? What do we use it for? How to connect it? What time frames? When to look for this setup? What are we looking for? I haven't decided if I'm gonna take it to the charts, but more than likely I am because that's my favorite part, and this is my last session for a while. But we're definitely gonna end with that bread and butter. which is just the key takeaways from this session. All right, so who is this session for? Now, this session is for everyone, but it's especially for those who can read a chart from top to bottom, but still hesitate to take the trade. It's for those who think it's safer on the sidelines. It's for those who trade with PTSD. It's for those who feel the need to hop in every play. It's for those who chase a trade to make up for the L's. It's for those who need a confidence boost in trading. And it's definitely for those who wants to be successful at trading. Crazy part is I've been every point on this list. I've been that person. But I try to make contents that can really simplify trading. I feel like I've traded every strategy and I've gone through my ups and downs with them as well. And it's my goal to take from those strategies and dumb it down for myself so I can present it to you all. And I feel like that's what I did with my mentorship, because it's just Fibs and Price and you. That's it. But I always say the strategy is the easiest part of trading, but that doesn't mean it's not hard to find the one that works best for you and your personality. So hopefully this setup that I present to you today will get you closer up to your mountaintop in this trading world. Now, no matter what you trade, ICT, the strat, breakout, VWAP, the setup that I'm going to show you definitely works within your strategy. So don't think it doesn't. It's not geared towards a particular strategy. This will definitely help boost your confidence. But let's get into it. So what's the 50? The 50% Fibonacci retracement level represents a halfway point between the swing high and swing low of a particular price movement. It indicates that price has retraced half of the distance between the 2 points. So here you have price in the uptrend and price in the downtrend. I'm going to show you how to connect these. If you're not familiar with Fibs, I do suggest you go check out the Fib videos that I have in my channel, because I go into depths about the Fibs. But uptrend, we're going to swing low, swing high. So you're going to connect from the low to the high and watch what price does when it pulls back. Yellow line is the 50%. So that means between this low and this high that we connected, this is the halfway price, the halfway line for price. And it's the reverse for a downtrend. We're going to go from the high first to the low. Yellow line is the 50%. So this yellow line represents the halfway point between this high and this low. So that's for an uptrend, low to high, downtrend, high to low. So it is said that if price is under the 50%, then you should be looking for puts. If price is above the 50%, then you should be leaning for calls. All right, so what do we use it for? Traders consider the 50% level as a potential area of support during an uptrend or resistance during a downtrend. So what does that look like? Let me show you real quick. So uptrend, price, 50% is the level that's acting as support for price. As you see, price is coming down to this 50%, but it's not closing or breaking below this 50% level. So this 50% level is acting as a level of support. It's a reverse for a downtrend. It's acting as a level of resistance. Price is getting there, but it's not breaking through or closing above it. So this is acting as a level of resistance because price is resisting to go higher. So that is price acting as support and resistance. And it says some traders use the 50% levels as entry or exit points on trades. So here you can either look to get in this play to take that for calls, or maybe this is a point where you'll take profits if you were already in this play. So that's how they use the 50% as exit or entry. And then also the 50% retracement level is often used in conjunction with other technical indicators on the chart patterns or chart patterns to confirm trading signals. So you want to use this level just like any level you use when you're trading, but you want to find it in confluence with whatever else you use to trade. So broadening formations, EMAs, SMA, VWAP, order blocks, whatever you use to trade, you want to find that in confluence with the 50% of this 50% level. So when you find this should increase your technical bias on taking that play. Now, you don't need to have all that in confluence. Let me just say that. You don't need all that to have that in confluence. When I trade, I only need one thing, the Confluence, but some people be waiting for like all 10 to have that Confluence. It makes no sense. But you would like to see that 50% align with something else to build that Confluence in that area. All right, so what time frames? For the purpose of this session, our focus is on the previous week and the previous day time frames. But the setup I am showing you definitely works on any time frame. If you see it on the month, then you can treat it the same way as if you saw it on the week or the day time frame. It's the same thing, but for the purpose of this video, previous week, previous day. All right, so when to look for this setup. So you're going to look for this setup over the weekend or whenever you get your screen time in. Maybe that's Friday after the market close. But you're looking to take the play possibly on Monday or Tuesday. So what are you looking for? So you want to look for either plays where price is already under the previous week 50 for puts or above it for calls, depending on which way you like to play when the market closes on Friday. And you want to wait for price to retrace back to this level and see if price rejects that level and heads back in this original direction. I promise that's going to make sense when I show it to you. But since Monday and Tuesday are normally retracement days, meaning that price does pull back before it continues in this original trend, this is why you're looking for this over the weekend to set it up for Monday and Tuesday to continue playing the trend in this original direction. Also, this retracement part, where I say you can wait for price to retrace, you definitely can wait for retrace, and I recommend you doing that, just so you can get in at a discount. But you definitely can play that retrace back to that week 50, but just make sure the risk is worth the reward, because you know that price could definitely react at that week 50. So just make sure it's worth it. But it also can break through that week 50 and just keep going and keep feeding you. But you just want to keep in mind that that possibly could happen. Also, you want to try to find plays that's trending with the entire market. So if ES or NQ or SPY, QQQ is trending up, then you should be looking for plays that's in the uptrend. If SPY QQQ is in the downtrend, then you should be looking for plays to the downside. Now, not saying that you can't go against the flow of the market, because you definitely can, but we are trying to build our confidence in our plays, and I find that you be more confident in plays when the market is going in your direction. All right, so what are we looking for? So here in this example, we have the Friday candle here. So like I said, on Friday at close, this is the candle that for the week that Friday candle is in for this week here. So when Friday closes, you'll have this candle. So act like this ain't even here, but you'll just have this candle and this candle. Blue line is the 50 previous week 50. You see, when it closed on Friday, we are already above the previous week 50. You know the anatomy of a candle, green uptrend candle closes at the top. So since the close is already above the week 50, when Monday happens, we're looking for a retracement back to this week 50 to head back up in this original direction. So you see Monday opens, it pulled to this week 50. It didn't get all the way there, and it doesn't have to. And then it took back off. And then you want to look to the left. You look to the left, you see this was a previous level of resistance before it turned into the level of support. So this is a strong area of confluence. You see this, we're getting in a discount because we're getting in at the bottom, not already at the top. And we're going to play this back to the upside. So these two candles here is represented by that current week candle. This is the one you're looking for on Friday. The previous weeks and the previous day candle. So that's what you're looking for in this example. Price above the week 50. Monday we retrace back to the week 50. Get a reaction that it gave before at a strong area of confluence, and then we're going to take that back up to the upside in this example. So that's what you're looking for. Now if price breaks below this, then you can just go ahead and move on to another play. Or if you want to hop in, go ahead and hop in. But again, I'm waiting for a retrace, get a reaction that I got last time, and head back up to the upside. But that's what we're looking for. All right, so in this example, Friday's candle is here. That's this candle on the week. So that Friday candle is represented in this week's candle. So blue line is this candle's week 50. So you can see we are closed below the week 50. So on Monday, we're looking for a retrace back to this week 50 to head back in the downtrend. So you can see price did get to this week 50 and started heading back down. So this is where we're getting in our contracts at a discount. As long as price is staying under this week 50, this previous week 50%, then we're going to hold this play. But this is what you're looking for on Monday. Catch a rejection or a bounce, depending on which way you're playing. And you're going to get in at a discount and hold that play as long as price holds that 50%. Until price tells us otherwise, we hold that play. All right, another example. Previous day candle here. That is this candle here. So that day candle is in this week's candle. We put the 50% on that previous week. And as you can see, price closed above the previous week's 50. Monday it opened. It did pull all the way down here, but it never closed below. Price closed at the bottom of the body on the downtrend candle, right? So that's Monday there. And then Tuesday, it did push below, but we took off. And that created this week's candle right here. Those two candles, Monday, Tuesday. This is Monday, Tuesday. So that's what you're looking for. As long as price holds this level, and we're looking to the left, it's appearing to be a strong level. We're going to trust this back to the upside in this example. Now, if price closes below this level, that's a different story. That's a different setup that we're looking for. But as long as it holds this level, that's the one we're concerned about. That's the one that's going to boost our confidence. That's the one that can start as a base hit and possibly turn into a home run. But that's what we're looking for. All right, so in this example here, previous week 50, price is already below it. This is the day time frame. This 50% here that you see here, that's the day candle. So that's the previous day candle. So this is Fridays. So you have price already below the day 50% and the previous week's 50%. Now when Monday opens up, you see it did retrace back to the previous week 50 and it closed right on the previous week 50. Now if you don't want to take this trade, then don't take this trade. It is okay for you to not to take this trade because I'm pretty sure there are plays where price is in a clearer direction than what this is giving. But as you can see, it closed right at that previous week 50 and then it headed back down. So that's exactly what you're looking for when you're waiting for that retracement on Mondays and or Tuesdays. All right, so let's take it to the charts. Let's go over some plays that I'm looking at for the coming week. Let's see what we got. All right, let's see what we got on our list. I like TJ Maxx. Let's look at TJ Maxx. All right, so we're looking here and here. All right, so this is my week and this is my day. All right, so if I throw a fib, which is the uptrend candle, we're gonna go low to high. And it's gonna give us our 50% level. So you see that here on the day. So that means this Friday candle closed above this 50%. Right? So now let's throw a fib on the day candle. We can kind of eye it, but for those who don't see it, that's low to high, 50% here. Also, I don't know if I said this earlier, but you do want to make sure that you have the previous year, previous quarter, previous month, previous week, and previous day at minimum 50%. And when you do, you'll see these setups on those higher time frames. And like I said, playing the same way. But this looks like this is probably going to take off on Monday. But who's to say? We play what we see, not what we feel. So what I'm looking for on Monday is price to get back to this 99.06. That'll be my first retracement level. If it breaks through that, then my next one will be, well, for the sake of this training, is the 97.90. But if you played off the previous month 50, then of course that'll be your next level before a price retrace back to head back up to the upside. But for the sake of this training, 97.90 is where we're looking for price to retrace back to and head back up to the upside. Like I always tell you guys, look to the left. We look to the left. This looks like a pretty strong level. It's done it before, so it should do it again until price says otherwise. So we know price has memory. That's why we always look to the left. So we're looking to get this same reaction that it gave before. If it gives it, we're going to look for those cheap contracts and head back up to the upside to take out these highs. But first, we want to see if it's just going to pull back to this 99.06, because it definitely can pull back to this 99.06 and take off. It definitely can do that. But that's what we're looking for on TJ Maxx. What's another one? Let's look at another one. Pan W. Let's look at Pan W. Alright, we got the week here. We got the day there. Alright. So if I put my fib on here on the week candle, high to low, 50% represented by the 283.72. If I put my fib on this day candle, this is a downtrend candle, we're gonna go low high, 288.22. Now this is my favorite one because this means price is already pulling back. So once this price is already pulling back to where I want it to go to, those are the ones that's probably gonna be top on my list. But Monday opens, I want to see price pull back to this 283.72 before it heads back up to the upside. Again, look to the left. What did price do before at this level? I'm looking for that same reaction. If it gives that same reaction, I'm getting in at a discount, and I'm gonna go take out the highs to the upside. So that's why I love the ones that's already begun to pull back, because it's not that far for it to get there and takes us back up to the upside. It's already heading in the direction I wanted to, and that's in the retracement direction before it takes off. Now I can get to this week 15 breakthrough again. Like I said, it definitely can do that, and you definitely can play that retracement back to this 283. You definitely can do that because it could break through and keep going down. But for me, I'm waiting for price to pull back and bounce. That's what I'm waiting for. But yeah, so that's how I'm looking at this on Monday. Another one? I don't know. Yeah, let's go one more. XLU. XLU. I love the sector plan. Uh-oh, did it freeze on me? It definitely did. Alright, there we go. Alright, so we got XLU, uptrend, fib that, bottom, top, cool. Oh, this is not even right. Alright, so 50% of the week is here. If I throw a fib on the day, 50% of the day is 64.04. Like I said, I love it when it's already beginning to pull back in the direction I want it to pull back. So when price opens on Monday, I want to see if price gets back to this 63.56. Now it's very convenient that the 50% of the week and the previous year 50 is aligned here. So what is this? An area that's in Confluence. Cool. So that's what I'm looking for. I'm looking for a price to pull back to this week 50 and give me what it gave before. It doesn't have to give me that, but that's what I'm looking for. If it gives me that, I'm taking it every time. And then, let me turn my fib on. Not my fibs, my broad information. Let me see something real quick. Give me a second, guys. Let me fib this real quick. Let me turn this back the other way. Alright, so if you can see here, my purple line is a broad information. Previous year 50 and the 50% of the previous week are all in Confluence on this time frame here. So this is appearing to be a stronger level than once first thought. So I'm definitely got this one at the top of my list because I want to see if it's going to give me the same reaction that it gave at this level before. Like I said, price has memory until it doesn't. So I want to see if price is going to come down like it did on this candle. See if it comes down on Monday, give me the same reaction it gave before. Get in at a discount to take this back up to take out these highs. So that's what I'm looking for on XLU on Monday. This is definitely at the top of my list for sure. All right, so I hope that was helpful for you guys. Just keep in mind, like I said, if it's above the 50%, we're looking for calls. If it's below it, we're leaning more puts. So keep that in mind. All right, let's head back on over. All right, so let's end with the bread and butter. So what did we talk about in this session? We talked about the previous week and the previous day 50%. Like I said, this setup works on any time frame, but for the purpose of building our confidence, we want to just stick to the week and day and play what we see there. Also, you can play the retrace if the reward is worth it. So if you play the retrace, then you know the target is that 50% level. If price breaks through that level, then of course the highs and lows, depending on which way you're playing, those are your targets. But just keep in mind, it definitely can reject that level and head back the way where it came from. Also, you want to look to the left. Always look to the left. Always look to the left. Always look to the left. You want to find those levels that are to the left because we know price has memory. So if price has been at this level before and gave a reaction, then it might do it again. So you want to keep that in mind when you're looking to the left. Also, you want to build a case for why you should take the play. So if price is respecting your Broadening formation, your VWAP, your EMA, your SMA, is at a previous level of support and resistance. If you have all that, then that's you building your case. That's why this is a strong area that's in Confluence to take this play back the opposite direction. So all these things matter when you're building a strong case on whether you should take the play or not. Of course, the more things you have in your favor, the more confident you are in that trade. But like I said, I only need one thing in Confluence for me to take the trade. So don't think that you need all 30 things to take the trade. Also, take the base hit. I feel like we always want to take the home run plays, and that's cool, but most of the time the setup is only good for a base hit. It might just be good for a bunt. Like, you know, it's only gonna go so far, and that's cool. And you have to be okay with accepting that. But just know that each base hits add up. They all add up. We know in baseball, 4 base hits is a point. So take the 4 base hits for your home run, just for you to score that point. It doesn't have to be a home run every time. And last but not least, push the damn button. Push the damn button. I don't care if it's for this setup or any setup that you like. Just push the button. Stop waiting for the stars to align in the sky with your Broadening formation, your order blocks, your VWAPs, your EMAs. Just press the damn button. You only need one thing in Confluence. You only need one thing. But people be thinking that they need 10 to 20 things in their favor for them to take the play. But by the time you see that, if you ever see it, the play is over. So please just push the button. Please push the button. How are you going to become the trader that you want to become by sitting on the sidelines? I know of no one who the world considers the greatest of all time by sitting on the bench. I don't know one. And we ain't bench players. We starters. So let's start acting like one. All right, so we have come to the end of this session. I hope the information in this session will assist you in some way along your trading journey. Like I told you guys, this is going to be my last one for a while. So hopefully this helps you get over that hump. So hopefully when I come back, I'll see these comments and it lets me know that your confidence has grown, and we can start becoming the traders that we want to become. But nothing has changed. Like I always say, 2024 will be our winning season. If you have any questions or comments, feel free to DM me or drop it in the comment section below. But until next time, I thank you for breaking bread with me. You guys stay blessed.